Welcome to Chain Reaction by Capital Copilot, your daily dose of the latest in cryptocurrency news, market insights, and blockchain trends. Let's get started. Bitcoin surged back above $93,000 today after a powerful recovery that liquidated hundreds of millions in short positions. Vanguard shocked the industry by ending its crypto ban and opening $9 trillion in assets to digital currencies. Meanwhile, strategy faces possible MSCI index removal that could trigger nearly $9 billion in forced selling. Let's dive into the market action. Bitcoin is currently trading at $93,011, up over 7% in the past 24 hours after dropping below $84,000 on Monday. Ethereum has bounced back above $3,000 at $3,072. Solana surged 12% to $141, Cardano jumped 14% to 43 cents, and XRP gained 9% to $2.18. The recovery triggered massive liquidations in derivatives markets. Roughly $457 million in positions were forcibly closed over 24 hours, with short positions accounting for 85% of that total. Bitcoin alone saw $224 million liquidated, while Ethereum added $94 million. The biggest story today is Vanguard's complete reversal on cryptocurrency. The $9 trillion asset manager announced it will allow trading of crypto-focused ETFs and mutual funds on its platform, ending years of opposition. This decision opens access to Bitcoin, Ethereum, XRP, and Solana ETFs for tens of millions of retirement and brokerage account holders. The move came after 35% of younger wealthy Americans reportedly left financial advisors who restricted crypto access, and after BlackRock's Bitcoin ETF became one of the fastest-growing products in market history. Meanwhile, strategy is facing a critical decision from MSCI that could reshape its investor base. The company, which holds over 650,000 Bitcoin, is in active discussions about potential removal from major equity indices. If MSCI excludes strategy from benchmarks, passive fund managers could be forced to sell up to $8.8 billion in shares. The decision is expected by January 15th, with any index changes taking effect in February. On the regulatory front, SEC Chairman Paul Atkins announced plans to detail a digital asset innovation exemption framework. The UK passed legislation formally recognising cryptocurrency as property, giving consumers stronger ownership rights and recovery protections. And Taiwan's Financial Supervisory Commission confirmed the island will see its first regulated stablecoin launch in the second half of 2026. Ethereum is preparing for its Fusaka upgrade, scheduled for later today. The upgrade introduces PeerDAS, which changes how the network handles data availability by enabling sampling rather than requiring full data downloads. This could increase blob capacity by up to 8 times and significantly reduce Layer 2 transaction fees. Despite the strong recovery, analysts remain cautious. Glassnode research argues this represents a mid-cycle pullback rather than a crypto winter, noting that Bitcoin has absorbed more than $732 billion in net new capital since 2022. However, structural concerns persist around corporate balance sheet exposure and pending regulatory reviews. That's a wrap for today's edition of Chain Reaction by Capital Copilot. We hope you're feeling more informed and ready to navigate the cryptoverse. Until next time, keep your digital wallets ready.